Tesla stock is moving up over 11.5% today. Short sellers are losing over $1.5 billion. I will put this into context and what this could mean for Tesla stock going forward. We also have some Tesla breaking news and a lot of analysts that are changing price targets on Tesla, as you normally see after an earnings. We have all of this and much more for you in this video. Let's go ahead and get you the news fast, and let's start right now. As Sawyer Merritt posts here on X, he says Tesla short sellers are on track to lose $1.6 billion today. This is because these shorts have been adding to their short positions for a while now. Heading into Tesla's Q1 earnings yesterday, and even still today from what we can tell, you were at multi-year highs for the short interest. You have 107.56 million shares that are currently sold short. Call it 1.07 million shares, right? 107 million shares. So every $10 Tesla stock goes up or down, short sellers make or lose $1.07 billion. Today, Tesla stock's up $16 on the day. So short sellers are actually losing more than $1.6 billion marginally. If we do go higher throughout the day, then, the losses really start to mount. And I think, this could just be the start of a larger rally for Tesla stock. But I'll talk about that more a little bit later into this video. On the day today, you are seeing return shares of about 1.26 million, borrowed shares of 1.32 million. So despite this great earnings call we just had from Tesla, this fantastic news, how new models are coming, maybe even by the end of this year, cheaper models, one could call the Model 2, or even just cheaper variants of the Model 3 or Model Y, shorts are still shorting more shares today than they're actually covering or returning. That's kind of insane. That's playing with fire here. Normally, you don't want to bet against Tesla when things are going well, and they've been so bad for so long, it made sense to short Tesla at higher prices in the 200s, right? I can't fault you for that, for shorting Tesla in the 200s. But today, even after this rally in the 160s, it doesn't make a lot of sense. You do have cost to borrow fees sitting at about 10% as well today. You do have another false article from Reuters, really just shows how uninformed they are when it comes to Tesla. They post this on their newswire. Tesla's CFO, Martin Visha, to resign. CFO stands for Chief Financial Officer. Martin Visha is not the Chief Financial Officer. He is the head of investor relations. Again, here is that post. It actually came out about an hour after the earnings call was over. We don't exactly know what's going on, why executives are leaving Tesla. Seems like every week now, but it really did not affect Tesla stock at all today. Tesla's Giga Texas factory will no longer be subject to the city of Austin's environmental regulations after the company used a new state law to have the property removed from the city's extraterritorial jurisdiction. This will free Tesla up to develop with fewer restrictions. Apparently, the new Model 3 Performance has 3 acceleration modes. You have chill, standard, and insane, as well as ride and handling. You have standard and sport, and then steering mode, you have comfort, standard, and what looks like sport. A Tesla owner who falsely claimed the car was an autopilot before a Melbourne crash just pled guilty. The defense attorney conceded his client had lied to police by making the false claim that the autopilot feature was activated. As far as analyst and price targets today, it's actually pretty interesting because most analysts are actually lowering their price targets today, and I'll explain why in just a moment. But I will say the average consensus on Tesla is a hold, with the average price target of $186.51 per share. So the average price target would still indicate a 29% potential gain here over the next 12 months. You do have Ronald Jushcom with Guggenheim, raising his price target from $122 to $126, so raised his price target $4. UPS lowered their price target from $160 down to $147. Tom Narian with RBC Capital lowered his price target $1 from $294 down to $293. Craig Irwin with Roth MKM reiterated his hold rating and $85 price target on the stock. George Giannis with Canaccord Genuity, he makes a lot of notes for Tesla and one that's pretty bullish on Tesla overall. He changed his price target lower from $234 per share down to $222 per share. Dan Ives with Wedbush, another well-known name there, he lowered his price target from $300 down to $275, still one of the highest price targets on the street for Tesla still. You do have Truist Securities, William Steen, that lowered his price target from $176 down to $162 per share. Mizuho lowered their price target from $195 down to $180. You do have B of A Securities that actually initiated coverage on the stock. John Murphy here, he upgraded the stock from a hold to a buy. He did not have a price target on Tesla before, and he just came out with a new price target of $220 per share. And Chris Pierce with Needham, he rates the stock a hold, but does not give Tesla a price target. So the aggregate price target for Tesla is actually falling today from $190.87 down to $186.51. Why is that happening? And Tesla stock is up 11%. Wouldn't that mean price targets would need to go higher? And on face value, people would say yes, because that's mostly what happens. Now, I explained this before Tesla earnings, but this was really going to be an earnings where either Tesla stock does very well or gets re-rated big time, like huge price target cuts, maybe even see the multiple fall if earnings were bad. Now, that is not what happened, but we can still expect, given we're really not going to see good growth this year, we can expect the analysts are going to lower their price targets. Okay, it would have been a lot worse. And I think Tesla stock was already priced for it to be a lot worse, for a lot of downgrades, for a lot of, steep price target reductions. You're seeing just trimming mainly across the board with, your biggest bulls on Tesla stock. And I think that was overall as to be expected either way after Tesla earnings. And another point I will point out here is we were expecting margins to fall a lot more than they did, and they came in better than expected, right? Well, we're not really expecting too much margin or profitability improvement. It actually sounded like Tesla's going to continue to aggressively reinvest into the business. It sounds like we could see more price cuts, and we likely will see price increases, price cuts. They're going to come and go. So I think the, action from analysts is going to be a lot more back and forth, right? If you see just a period of time where there's no price cuts and Tesla raises prices, estimates may go higher for profitability, for forward EPS, which is the main driver that drives the stock in the near term. Right now, you kind of got to take down your estimates because it sounds like more price cuts are coming. But again, with Tesla in the 140s or even now in the 160s, that's pretty well priced into Tesla stock. And that's why Tesla stock is going up almost 12% today at the time of recording this video, even though under the surface, it looks like a lot of analysts are super bearish on Tesla. They just have to adjust their price targets for the near term. I think everyone got a lot more bullish on Tesla, at least the realistic analyst, for the end of this year into 2025, which really matters for the stock, because keep in mind, you're not necessarily buying a stock today for next quarter or the quarter after that. Typically, you're buying a stock for multiple quarters down the line, right? That's why you buy a stock, because you think it's going to get better. It's going to grow. And that thesis got stronger. The near term, though, got a little bit weaker as far as an overall profitability thesis. In terms of options today in Tesla from big money, these are hedge funds, institutions, and money managers. You can see 1,506 trades so far, totaling $441 million with a positive order value of 54%. So slightly better than neutral, so slightly positive here on the day today. And I think these numbers are going to be much larger by the end of the day. A lot of the option activity is going to come in towards the last hour or so of the trading day, so keep that in mind. And I will go over the final numbers with you coming out at 8 p.m. tonight. So stay tuned to the channel, and if you have not done so already, hit the like button, subscribe to the channel because it is free 99. On another note, Mercedes has officially unveiled the all-electric G-Class with a starting price of $180,000, 0 to 62 miles per hour at 4.7 seconds, 116 kilowatt-hour battery, and an estimated 250-mile range. Bernstein said this about Tesla today, quote, "We struggle with why Tesla needs a discrete robotaxi offering, and we believe widespread deployment of full self-driving is 5 to 10 years away, and the FSD will not necessarily be a winner-take-all market." And that's just outrageous. 5 to 10 years away at this rate of improvement. These analysts don't keep up with Tesla the way that you do. Like every day, if you watch these videos, you are 3 to 5 times more informed than the average Wall Street analyst. And that's why watching these videos will literally help you make money, because this is just outright egregious. 5 to 10 years away. I'm thinking more 2 to 5 years away. For mass adoption, robotaxi is everywhere. I think 5 years is really a target for like Europe and parts of China, South Korea. I think more like a year or two away is the US, is Canada, at least to start rolling out in select cities. Sure, a widespread deployment where robotaxi is in every city, kind of like DoorDash today, could be 5 years away. By that point, though, dude, you're going to be bringing in so much in profits. Buying Tesla stock at these prices is going to be, you will kick yourself in the head if you can do that for not buying Tesla stock at these prices 5 years from now, in my personal opinion. Gary Black said this about Tesla today. "We were pleased that Tesla confirmed that not only was the more affordable next-gen vehicle not canceled, Tesla appears to have accelerated the start of production previously by the end of 2025 to, quote, early 2025. Reuters is wrongly taking credit for being right that Tesla, quote, retreated from a more ambitious plan to produce an all-new model that had been expected to cost $25,000. It seems to us Tesla's plan to build more affordable next-gen vehicles using the same platform as Robotaxi remains firmly in place. Finally, we liked that despite high inventory discounts in Q1, auto gross margins excluding regulatory credits came in at 16.2% versus 15.9% as expected, although we don't yet know how much one-time FSD revenue recognition was in that number. All in all, one of Elon's best conference calls, even if the actual results came in a tad light. And just, I mean, if Tesla stock's up 11, 12% off of the actual, results from Tesla coming in light, just imagine when things start to look better on a more fundamental basis. And keep in mind, once you do get into 2025, the year-over-year comparisons are going to start to be a lot easier to beat. So for an example, if Tesla put up 43 cents of, EPS or 45 cents of EPS for this quarter, depending if you're looking at GAAP or non-GAAP or adjusted or whatnot, say next year for Q1 2025, EPS could come in $1, and that's going to be over 100% change year over year in a positive way. I mean, 2025 looks very bright on a fundamental basis for Tesla. And I just don't want you guys to forget that as well. Here on the day today, as far as Google Trends data, as I said before, for full self-driving, you went to 100, you fell down to 43, now you're at 54. This data is partial, but it looks like you are starting to trend higher than you were previously. Previously, you were anywhere from 10 to 20. Now it looks like you're anywhere from 40 to 50. I expect this will fall a little bit more, and you'll probably trend in between 30 and 45. That's my guess, and that would, suggests the take rate is higher for full self-driving, which I don't really think full self-driving is in the valuation models for Tesla today, at least from analysts, which that could ultimately prove to be a very lucrative source of profits for Tesla, say in 2025, once the free trial is over and more people have signed up. I think that's something you should also consider into your investment thesis. Google Trends data for the Cybertruck is going down about 1 point from 61 down to 60, but take a look at the Model 3 and the Model Y, just exploding. The Model Y going from 30 to 40, the Model 3 going from 24 to 34. This is the best sign that we have of what potential demand looks like on a day-by-day basis for Tesla. If these charts are going higher, odds are good that deliveries are going to be good. Just putting 2 and 2 together. If they start to fall, well, maybe not. And I will also remind you that this is typically not Tesla's best quarter, right? Q3, Q4, they tend to be the better quarters for Tesla. And the fact that you're seeing Google Trends data that you have not seen in a very long time across the board for the Tesla lineup, like these are the highest points you have seen in over a year by far for the Cybertruck, but even for the Model 3 and the Model Y, you haven't been here before, right? At least not in the last year. That's a pretty good sign. Q2 could be strong. Now you're also looking at the Model S at 14 and the Model X at 11. These were recently at 11 and 9 respectively. So even the highest price models seeing some more Google Trends or search interest from customers. Well, let me tell you right now, Stocktwits doesn't make a whole lot of sense to me. Sentiment is coming in at extremely bearish at 7, the lowest number I've seen for Tesla in forever, basically. I looked at the feed and there's more bullish comments than not, so I don't know if this is correct. Yesterday you were bullish at 62. So I'm not gonna assume that's correct because a lot of people are bullish on Tesla today here on Stocktwits, but I don't know what's going on there. Message volume today is at 89. That is extremely high, one of the highest numbers I have seen on Tesla in a long time. Yesterday it was at 64 and the participation ratio still sits at 55. You do have 10-year treasury yields that are up about 6 basis points today. That is putting a little bit of pressure on broader markets. The Russell 2000 is down almost 1/4 of 1%. The Nasdaq's barely up 1/10 of 1%. S&P slightly red, and the Dow is down about 1/10 of 1%. I will also remind you that earnings still are going to be coming, and the biggest earnings are still in front of us. Today in after hours, you have Meta, IBM, Ford, Chipotle, ServiceNow, Viking Therapeutics, Lam Research, Vail, and Align. Tomorrow morning, you have Royal Caribbean, American Airlines, Newmont, Altria, Caterpillar, Southwest, Bristol Myers, Mobileye, AstraZeneca. And then in after hours tomorrow, that's your big day. Microsoft, Alphabet, Intel, Snapchat, Roku, Dexcom, T-Mobile, Gilead, and a Jinko Eagle. And then on Friday, you have some oil names like Chevron and Exxon, and some healthcare names like AbbVie, Colgate, HCA Healthcare, right? Couple other names as well. These are just your largest names that have the most analysts covering them. But here in after hours, Meta will report, and that's going to have a large impact on your other big tech stocks. So if Meta goes up a lot or goes down a lot, that will definitely move the markets in a pretty substantial way, at least on the headline S&P and the Nasdaq. You are expecting a 9% plus or minus move. You've seen Tesla yesterday was pricing in a 10% move, and what I've found is usually what the market makers price in is what happens, unless it's completely just status quo and the stock's not trading at all-time highs and it's kind of priced for like who knows what's going to happen. Then a stock can move like half of what's priced in. But that's just if nothing is bad, nothing's good. It's kind of just in line with expectations. Now, if anything's good, really good, like really, really good, maybe a stock can go up quite a bit here. But if something is bad, I think stocks right now are prone for some big falls. So you want to keep that in mind. But Meta pricing in 9%, I don't think there's much of a trade there. It's probably going to move about 9-10%. Up or down. And if it's a 10% move downwards, that's going to put more pressure on Tesla tomorrow because it's going to put more pressure on just the broader markets. And finally, if you guys did not watch the last video, as most of you guys know, if you did watch the last video, I think Tesla stock can go higher from here and likely will go higher from here. I think the next test is your 20-day moving average. You kind of found some resistance here today at $164.40 per share. If you get above that, that's fantastic. Then you're going to be, dealing with your 50-day moving average at 176. And then 188 is another pretty strong level of resistance. And then you're coming up to your 100-day moving average at about $200 per share. I will tell you, though, today, there's been a lot of volatility back and forth. Tesla kind of sold off a little bit in the beginning of trading, rallied, sold off a little bit, rallying back as we speak, currently up about 11.5%. The big level I wanted to see Tesla get above is basically where we are right now at about $161 per share. That means you fill the gap. This gap down that you've seen on April 15th, where Tesla stock fell about 5.6%, you filled that, you're above that. That's fantastic. That's exactly where we essentially want to be right now. And if we hold support here above 160, even if, let's say, Meta is bad tomorrow, fantastic. And I do think now the trend is likely to the upside. Typically, when you do get these big gaps, it's usually not a gap up and then a gap down. That doesn't happen all too often. And I think everyone being so bearish on Tesla, there's a lot of people that still want to get back into Tesla, that have already sold Tesla, that maybe are second guessing themselves. You also have a very large short position in Tesla, in which shorts are taking a spanking today, taking a beating. And if Tesla stock does go higher another day or two, that could fuel more buying pressure to come into the stock and help the stock hold current levels and probably go higher if I were to imagine. Now, the RSI on Tesla is sitting at 47.05, so you're still kind of bearish on the RSI. Like today did not get even the RSI up to neutral. That would suggest to me there could be a couple more days of a pretty fierce rally before you have to start talking about Tesla being, overbought. We're really not even close to that at this moment. So let me know what you think about this down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. We did close out some of our Tesla calls, the 165 calls expiring by May 10th. Closed those out at the high of the day, brought in like $600 or so, bought them for a little bit over 150 or so. It was like a 350 percenter. And then I do have some debit spreads still for the 185 to 195. If Tesla stock does run more from here, those could be 3,000-4,000% winning trades, and well, still optimistic that those will work out. But nonetheless, guys, let me know what you think about this down below in the comment section. You guys have a fantastic rest of your day. I will see you back here at 8 p.m. Eastern Standard Time tonight. Until then, enjoy your day, and I will see you in the next one.